Las Vegas. I'm Diego Sanchez, president of HousingWire, and I'm pleased to be joined by David Schneider, president and CEO of Senlar.
Yeah.
David, thanks so much for joining me.
Thank you for having me. It's an honor to be here. Appreciate the time.
So before we dive in, could you just let us know what is Senlar and what role does it play in the mortgage ecosystem?
Yeah, great question. So Cenlar is a subservicer. We service loans for MSR owners who find that we provide greater value than they can do on their own. So in other words, a lot of people own MSR and they say, I'm not so good at doing this. I don't have the infrastructure, I don't have the scale, I don't have the people and the technology, and we provide that for our clients. So we like to think we stand in the back for our clients as their back office and really enable them to own MSR and serve their customers.
So why should a lender work with a subservicer? You talked about some of the reasons, but walk us through all the rationales.
Well, I'm biased, first of all, but right. So look, I think using a subservicer is a great play for most owners of MSR because it's a scale business. We service 2 million loans, and we think we're not sure we'll have the right scale at that level. So it's a scale business, and what that scale means is that we invest in technology, we invest in people. We're spending a lot of time on building out our AI lab, different partnerships we're building with people, and that is hard to do when you only have 20,000, 50,000, even 100,000 loans. So we bring that scale to our clients and allow them to take advantage of all that scale means to us, pass it on to our clients.
So backing up for a moment, why should a lender even consider retaining servicing in this environment?
Yeah. Well, I think everyone's going to make their own decisions. There's a lot of lenders out there, and I've been in the mortgage business for 30 years, and I've owned MSR and I've not owned MSR. And it's really dependent on what your capital structure is in terms of how you want to run your business. And MSR is a capital-intensive asset, and there's a lot of originators out there who say, I'm going to be really good at originating, and I'm going to sell all my MSR on a flow basis. We see that with a lot of folks. A lot of others say, I want to have a more balanced model. I want to have a model where I control the customer, I can resolicit the customer for refinance. We've heard a lot of talk about that in the industry, especially recently. And I want to have cash flows coming in when rates are higher and the origination business isn't so good. So really it's dependent on that particular company, their capital structure, and their goals for the company.
Yeah, you are seeing several of the big servicers build a lot of technology so that they can originate from their book. Right? Which means they're recapturing a mortgage that some other originator created. Yeah. Right? So that has to be another factor at play when a lender thinks about subservicing.
It absolutely is. When you think about servicing, you think about a few things. One is the cash flow related to the servicing, and what does that do for your income statement, and how do you manage your balance sheet? And then you also think about the retention of that customer. And retention, quite honestly, this has been something that we've been talking about as an industry for 30 years, 25 years, and sometimes we get it good, sometimes we don't do it so well. But that is really important because once you have that customer has a great experience with us as someone like Cenlar doing the subservicing, that customer is more likely to go back to our clients. And we do most of our servicing on a private label basis, which means it's in the name of our client. So you don't even see Senlar, you see the client, and then the customer has a good experience and they want to get the new loan. It's going to be easier with their existing lender, and they go back there. Some lenders have different strategies too. Some lenders like it to go through a call center. Some lenders like it to go back through their broker channel. Some lenders like it to go back through their retail loan officer channel. So it's really dependent on what's important to that specific originator.
All right, let's say the lender has made the decision to retain servicing. Yep. Now they have to work with a subservicer, or they want to work with a subservicer. What should they be thinking about, and how should they be comparing, contrasting the different subservices out there like Senlar?
Yeah. So when I think about that, I think about three things. I think about the size and the scale of who you're partnering with. And not because that size is important just because of size alone, but it's important because of the investment you can make. Mm-hmm. It's important in the investment in technology, especially now with the investment we're making in AI, the investment we're making in machine learning, the investment we're making in our core platforms. Those investments cost a lot of money, and you can the more units you have, you can spread that cost, and that allows us to drive our costs down and our price down to our clients. So that's important. Second is, what kind of company are you? And we're a federally regulated bank regulated by the OCC, so we have a very high bar for risk, infrastructure, and compliance. And as you know, in servicing, risk and compliance is everything because you got to do things right. And there's like thousands of rules. There's thousands of rules, and you got to follow all those rules every single day. So that's important. And then third is, who are the people? And at Cenlar, we like to think of ourselves as we're mortgage bankers first and subservicing partners second. And all of us, I've been in the industry 35 years and run big mortgage companies, small mortgage companies, and that's kind of true for everybody on the team. And what that means to us is that we understand our clients. We understand the position they're in, what they're trying to achieve, and we can help them achieve their goals.
So you've spent time at originators, you're now at Senlar. What excites you about servicing in particular, as opposed to being, a leader at a mortgage bank?
Yeah, I mean, I love mortgage banking to start with. It's what I do, it's what I've done for my career, and whether it's working with loan officers or working with brokers or now doing servicing, all of it's really fun and unique, and it's a different challenge. This is a unique challenge because of the size and scale of the platform. I mean, we service 2 million loans. We have 2 million customers. We have customers calling every single day. And that's really been fun to think about how to bring technology, how to use the right resources to improve the customer experience. Great example is, how do we get more customers on a digital platform? And how do we help them make more of their servicing relationship? One great product we're working with, one of our clients is UWM, and they have a relationship with Built, which we're having build out with them. And Built does a lot of payment rewards programs for rental properties, and now they're introducing it to mortgage banking, so you can get rewards for making your mortgage payment. So it's those kind of innovative things that we do with our clients that we think are pretty interesting.
Yeah, and subservicing is having a little bit of a moment. You mentioned UWM, Rocket bought Mr. Cooper, and I think that caused a lot of lenders to say, okay, maybe we need to consider a subservicer.
Yeah, I think a lot of that is focusing on subservicing, focusing on clients, and also one of the things that we do is we help clients with retention. We don't compete with clients. Right. We don't originate a single loan, but we help you do with analytics. We have a new program with a company called Ardley, which helps with retention analytics. And what that also does for us is, for some of our clients who are smaller, who can't really afford to buy that platform themselves, we can help them with that because we can spread it out against our whole client platform and really make advanced tools available for them.
So I mentioned before that several of the big servicers are deploying a lot of technology, including artificial intelligence, to improve their ability to originate from their book. Yeah. How is Cenlar keeping up with those big servicers and helping your clients recapture more of their own book? Yeah,
I think with recapture, there's a few elements of it. It's being there at that exact time that someone wants to do their next loan. Because nobody wakes up any day and says, hey, it's great time to do a loan, right? Normal people don't, you and I might think that, but normal people don't say that, right? They say well, I'm talking to my financial planner, I'm talking to my banker, my neighbor just got a refi, maybe I should look at it. And what you want to do is to be there at that time for that customer when they think about it. And also make it known to them that they now have an opportunity to do a refinance transaction. You'd be surprised at how many people don't really know. They don't follow the markets like you and I follow the markets, and they might not know that they could save $500 a month, $300 a month if they do a refinance transaction. So it's making that information available to the clients. So what we try and do is help our clients with advanced analytics, better understanding of customers, so that when they're ready to do that loan, they can take advantage of that opportunity.
All right, so fingers crossed, we're moving into a lower rate environment in 2026, who knows? Rates are going to do what they do. But in this environment, what do you see as the opportunities in 2026 in terms of origination and then what you do, subservicing?
Yeah. I think one of the things I've learned over the time is I have no idea where rates are going. If anyone wants to, if I give a rate bet, you can be pretty sure shorting it is the best idea. But I think for mortgage bankers, what's important is you need to be ready for everything. I've always said that great mortgage bankers have 3 books on their table. They have rates stay the same, rates go up, rates go down. And you got to be ready for all three of those things, and you got to have your plan ahead of time, because the best mortgage bankers are ahead of the curve. They know when it's happening, they react quickly, they respond in the market. And for us, how we can help them is to make sure that when the time comes and it is a refi market, we help them with that process. When the time comes it's not a refi market, we help them with streamlining their costs and managing their cash position.
David, I could talk servicing and subservicing all day. It's a really fascinating topic, especially right now. Thank you so much for joining me today.
Thank you, appreciate it, enjoyed it.